This is Ken Lake with MAC with the technical market update for Tuesday, October 11th. Bear in mind, tomorrow at noon we have USDA's crop report, which may change a lot of the things that we've talked about in the last couple of days. But until then, I want to start with December wheat. You see that December wheat continues to be a perfectly sideways market, a little blip higher here, but trading around this 401 20-day moving average, somewhat overbought. But again, just tracking sideways here, and I would expect that to continue to happen until we see better evidence that U.S. farmers are going to cut seedings this fall. I want to switch now to November soybeans. The same things happening in soybeans. We're seeing sideways track of these soybeans in preparation for tomorrow's report. Support at 937. Following this 959 20-day moving average, but a couple of crosses here in the moving average indicators which are fairly bearish. Switching to December corn, the same sort of patterns have evolved. Pretty sideways market, looks a little bit like the wheat market, except that we've got a bullish cross here and a couple of the moving averages. Somewhat overbought, maybe could correct a little lower with this report, but my bias is that we're sideways on corn, perhaps a little lower in soybeans once the report comes out tomorrow, and sideways on wheat. I want to finish with this. This is simply the corn beans ratio. This is on a weekly basis. Notice that a 15-year average for the corn bean ratio is 2.5 to 1. This is a weekly chart. So we're tracking a close last week at 2.6 to 1. Notice that a while back, right after spring planting, we were closer to or a little above 3 to 1. And anytime we're 3 to 1, it favors soybeans. That's why we saw an increase in soybean acres this fall. And then, of course, down here you'd see it favor corn when corn prices are a little high. When you switch this to a daily chart, you notice that on the daily chart, hold on just a minute. Switching to a daily chart. Well, it's stuck now. So, but on my daily chart, the stocks, or not the stocks use, the corn bean ratio is about 2.3 to 1. So that's starting to favor corn, or at least saying that corn prices are staying firm with soybean prices dropping. So I think we'll see that continuation into tomorrow's report. Wouldn't be surprised to see a bearish number out of USDA and soybeans perhaps 50 lower. But at that point, buyers have to probably take note of that and would come in on the buy side of this and may put the lows in for the year in the soybeans if we could trade that low.